You are listening to ChartingWealth.com for Thursday, the 22nd of October, 2015. What do we have going on? We always start with IYY, which is the iShares Dow Jones U.S. Total Market Index Fund. It is an ETF, an exchange-traded fund. It tracks the total market. And what do we see in the total market? Well, we saw a run-up over the last few days. We've not yet crossed the two-day trend line going down on the big chart, but we did have a drop today. However, our candle is not filled in as far as a red down candle goes. It was a down day of 0.61%. Again, that's 0.61%. So that's not a full percent. Sometimes when you hear that point and you hear the 6.1, you think, is that a 6% drop? No, just a little over 0.5% drop. But the market did go down in total. We've so far, perhaps we're setting a new ceiling on the market. We'll continue to watch that. We did see a little bit of a turn in on the MACD, and we saw a little bit of a decrease in the derivative oscillator. So a bit of a converging, but still far apart between the MACD and the signal line for any hard down in the long chart. If we go from our two-day chart to the 4-hour chart, we can see what happened in the afternoon, and we can see that the market over the last several days has what appears to be topped out. We see the Bollinger Band, the volatility bands have come down substantially from the top, and we saw the market make a significant down in the afternoon. It actually went down about twice again as much as it ended up. So the bears drove the market way down. The bulls were able to push it up and keep it from being down about 1.25%. So they were able to keep it at about a 0.61% down. We do have a crossover, as we called that yesterday, going down in the market. That happened yesterday afternoon. Bit of a bump up in the morning, but not enough to push it back through. And now we have a down move. We do have a converse right now. We have the large chart, the two-day chart is going up, and the 4-hour chart is going down. So we haven't crossed, the alarm bells aren't off yet. We have not crossed the two-day trend line, but please, as we talked about yesterday, keep an eye out for that to see if this was just a hiccup. And again, if this red box is going, if the red box on the candle is going to fill in, as we see on real down moves with the type of chart that we are using. So just pay attention, keep your eyes open and watch for it. If we now revert to the SPY, it looks very similar to the total market. The SPY is the S&P 500. It's another exchange-traded fund that we like to mess around with. We like to trade. It looks very similar with a bit of a converging, bit of a reduction in that is a bit of a converging on the MACD, a bit of a reduction on the derivative oscillator. And we see a down move on the two-day candle. Still hasn't broken the two-day trend line. If we go to our 4-hour chart, we're going to see that it looks very similar to the total market. It crossed over about the same time in the morning or yesterday afternoon. And that, when I say yesterday afternoon, I'm sorry, I mean the afternoon of the 20th, that is Tuesday. This is our broadcast for Thursday. I'm recording it on Wednesday, so I don't wish to confuse you. What we saw happen on Wednesday afternoon was the huge down move. Again, the SPY is down just about the same, just a little bit more, 0.62 versus 0.61% of the total market. So we do have confirmed crossover on the small chart. But as I said, the big chart is still in its up move. So let's see how the market digests this down move. Last, let's go to the Qs. It is down technically for the day about 0.61%. We're going to move our ceiling line up. That's how easy it is to do. For those of you watching on video, you saw me just take this software that the good folks, Chris Warden and the folks over at Free Stock Charts, amazing software, amazing app. If you don't have our charting layout from chartingwealth.com, you need it. All you got to do is email us, CW, like Charting Wealth, CW at chartingwealth.com. We'll shoot that right over to you along with our free stock chart training where you can learn how to read a stock chart our way. But we've redrawn our ceiling and we see again a down move in the Qs, very similar. a little bit. Now, the derivative oscillator continued to heat up in the Qs over the course of the day. And we don't see anywhere near the down, any kind of huge down wick either. We see an up wick. So again, we don't have anywhere near the down force in the Qs, which again is the NASDAQ 100. We don't see that on today's calendar. It is curious, though, if you look at the highest of the highs over and you look at the highest of the highs throughout the course of the day, if we go all the way over to the 17th, the candle of the 17th, if we max those out, it's pretty much the highest the market's gotten to, which is somewhere around 109, something like that. So that is indeed curious to watch. So we'll continue to keep our eyes on that. But again, the market crossed over going up for the NASDAQ 100 back on the 5th of October and has continued to run up until Wednesday, the 21st. So let's now look at what happened intraday by looking at the 4-hour chart. We can see a bump up in the morning and then that broad knockover in the afternoon. What do we see? Well, we see all the down movement that happened. In fact, looked like the NASDAQ went down about twice as much as it went. It went down during the course of the day twice as much as it finally settled. Those of you who know how to read a candlestick, if you don't know how to read a candlestick chart, you need to take our training online. You can find that at chartingwealth.com. But as we look at the candlestick, we can see that the bulls were able to push the market all the way to the top of the wick, and the bears were able to drag it all the way down. The bulls were then able to push it back so that it closed much higher than it had originally reached. So there was some panic on the wick on the bottom and some exuberance perhaps on the wick on the top. But again, the market closed down, like we said, 0.61% for the day. The derivative oscillator lost a lot of speed and it crossed over going down for the first time since the 15th. Actually, yes, since the 15th. So we do have the 2-day chart, of course, is still going up on the Qs, and we have that difference between the big chart and the little chart. So we very much need to pay attention to those things. Now, as we continue to go on, and I, of course, have an alarm going off, and I very much apologize for that. That rarely happens. We are going to lastly wrap things up on GLD. What is GLD? Well, that is gold. And what do we see going on there? Well, we see further down moves on gold. We see that gold crossed over on the 2-day chart. No, I'm sorry, it's not crossed over, but we have the makings potentially of a crossover in the future. We're going to talk about the 4-hour chart, which is the real chart that we use. It's not yet crossed through and closed below. It did cross through a little bit today, but has not yet crossed through and closed below the 2-day trend line. But we do see a doji. What does doji mean in our type of candlestick trading? Well, it means a lot of indecision, and that's on the big chart. But we know, those of you who listen to us every day, that it's not the big chart that we always pay attention to in gold. It's the 4-hour chart. What do we see going on there? We see a crossover going down on the 19th, and as we've talked about, what? Again and again and again, what do you see? This 4-hour chart is magical. It is just a great chart. It crossed over going down on the 19th. If you would have gotten in then, you'd have been doing well in gold. Now again, we're talking an inverse gold fund for you to practice with. A little bit of a bump up on the morning of the 20th in the afternoon, and then a continued down movement throughout the course of the day. Gold was down 0.89% for the day. And again, that 4-hour chart just keeps leading us correct. So continue to watch that. If you are interested in learning to trade gold, then again, like we talk about over and over and over, we suggest that you set yourself up a virtual trading account and then start using this 4-hour chart to buy GLD when it's going up, as it did when it crossed over on the 5th of October. And then again, look to get into an inverse fund when gold rolls over and goes down. So we're still using our 2-day trend line. We're about to cross through that on the big chart. But again, our signal was the crossover on the MACD on the 4-hour chart. So we're happy about that. Now, what do you need to do going into the markets on Thursday morning? Continue to watch this down movement. See if it's going to actually push through the 2-day trend line on the big charts, or if they're just digesting some gains and are going to go back up again. Again, it's been a little bit of up and down here over the last few days, so pay attention to that. The big chart always leads you. Remember that. Continue to watch. And again, on gold, just continue to see how far down gold will go. It's fun to watch, and know that our 4-hour chart has been such a good one for us. Thanks so much for listening. If you do want our charting layout, and if you do want our training, all you got to do is email us, cw@chartingwealth.com. We'll be happy to get that out to you. Go sign up for our daily newsletter where we actually send you a link to the videos. And make sure that you follow us on Facebook, Twitter, and Instagram. Thank you so much for your support and for caring about what we do. We sure hope it helps you as you learn to invest and as you get involved in doing your virtual trading. Thank you so much from chartingwealth.com.